Hello, welcome to the Stanford Mortgage Knowledge Library. I'm Tim Rowan, branch manager with Stanford Mortgage. In your visit to the library this week, you're about to learn about the new ATR/QM policies that just went into place today, January 10th, 2014, across the entire lending industry. Hope you find this information helpful. I'll check back with you in just a few minutes.
Helping our clients, ability to repay, and qualified mortgages rule implementation. Topics we're going to cover here real quick. At Stanford Mortgage and Pinnacle Capital Mortgage Corp., we of course embrace change and are prepared for the QM and ATR rule implementation taking effect January of 2014. Ability to repay, also referred to as ATR, and qualified mortgages, also referred to as QM. Ability to repay is based on several different sections of the Dodd-Frank Act and is enforced by the Consumer Financial Protection Bureau, also called the CFPB. In other words, ATR is the law administered by our regulator, the CFPB. As a regulated lender, Stanford and Pinnacle must comply with the ATR rules because it is law. The qualified mortgage rule provides a way for lenders to obtain a safe harbor on the ATR provisions of the law. This means that in the case of a lawsuit, the court will presume that lenders have met the ATR requirement if the loan in question has the QM designation. The QM standard limits the types and amount of fees that can be charged and excludes certain loan characteristics such as an interest-only loan feature. While QM compliance is not required, most lenders will choose the additional protection from legal and regulatory risk that it provides. What does the law say? CFPB. Lender must make a reasonable and good faith determination that a borrower has a reasonable ability to repay the loan based on the terms and conditions of the loan. What factors are considered in the ability to repay analysis? We refer to them here as the Big 8. Current and reasonable expected income, current employment status, monthly mortgage payment for the new loan, monthly payments for any secondary liens secured by the same property, monthly payments for other property related expenses, things like taxes, insurance, HOA, etc. Other debts, alimony and child support obligations, monthly debt to income ratio or residual income, and of course credit history. So what's different? Documentation for requirements for ATR are really not much different than what we're experiencing today and actually have been doing now for quite some time. What is different is the requirement to provide evidence of ATR to regulators and secondary market. Remember, we will now be required to provide evidence of the ability to repay for each of our borrowers, both to the regulators and secondary market investors. Who determines the ability to repay? Well, the underwriters do. Underwriters are responsible for determining the ability to repay and providing the appropriate documentation to again evidence that ability to repay. Summary of ATR. Complying with the new ATR rules is not much different than what we see today. Here are a couple of key points. An analysis of all 8 ATR factors must be demonstrated in each file to comply with the new law. ATR programs with manual underwriting must comply with maximum DTI and other qualification guidelines specific to that program. Again, not really too much different. Let's discuss now a little bit about qualified mortgage, or QM. We will only be funding QM designated loans from here forward. Now, quite honestly, that's really all we have been doing, and there are a few exceptions to that, so let's talk about it for a little bit. This is primarily because Pinnacle's investors will only purchase QM loans. Remember, they go into a QM bucket with some safe harbor once they're designated as QM, preventing future lawsuits from potential borrowers or homeowners claiming they didn't know what they were getting. They require the high evidentiary standard of a QM loan. The QM standard provides a safe harbor for the originating lender and any purchasing entity. In other words, in the event of a borrower lawsuit, if the loan has met the QM standard, ATR is assumed and the trial is ended. To establish QM and get the safe harbor, the loan must pass 3 tests. APOR test, which is average prime offer rate test, points and fees tests, and either the general qualified mortgage DTI rule, where the DTI cannot exceed 43%, or an agency exception, which would be the automated underwriting system, approve eligible through Fannie Mae, Freddie Mac, and DU or LP. Summary of QM. Here are a couple of key points as it relates to QM. With a few exceptions, Pinnacle only funds ability to repay loans that also have the qualified mortgage designation. Qualified mortgage loans provide a safe harbor for potential borrower lawsuits. To get the QM designation, the loan must satisfy the three tests: APOR test and points and fees, and of course the DTI or automated underwriting system test. We, of course, want to continue to be the lender of choice for your clients. We are here to help your clients get into their new homes and continue to be your expert in the industry. PCM and Stanford Mortgage, of course, we embrace these changes. We're already prepared for the QM and ATR rule implementation taking place right now in January 2014. Remember, ATR is the law, and it is enforced by CFPB. However, compliance with the law should not be anything new. We have a natural responsibility not to make loans to people who cannot repay them. Makes perfect sense. The qualified mortgage, or QM, designation protects PCM and the other lenders and any of its investors from borrower lawsuits by giving them a safe harbor. With a few exceptions, Stanford and Pinnacle only will be funding ATR loans that also have the QM designation. Thank you all for your time. I hope you've all found this information helpful.
Welcome back. Hopefully you all found that information helpful and maybe learned a little bit something that you didn't know prior to watching this video. The truth is not much is really going to change as far as the way we go about doing our lending business here at Stanford Mortgage. We've been underwriting files based on the ability to repay for quite some time. In fact, most of the industry has. So there's going to be a few changes here and there. But with any concerns or questions you might have regarding any particular client you might be working with, be sure to reach out to a Stanford Mortgage advisor to get some more detailed and in-depth information as to how this policy, ATR/QM, may or may not affect any of your clientele or your current business. Also, keep an eye open for more Knowledge Library emails coming your way throughout the year. As we get information, we want to do everything we can to roll it out to you in our industry to help educate you and us along the way. Hope you enjoyed your visit to the library this week. We'll talk to you soon.